Well, Joseph, we've heard today from Glencore Xstrata, the big trader come miner. It's given us its full year numbers today. Which side of the business is doing better at the moment?
Superficially, trading. Last year was a pretty bad year for commodity prices in general, so it kind of makes sense that the mining side of it didn't do so well. So EBITDA on that side kind of fell 4%, which is not too bad, considering that they had increased production and cost savings to kind of make up for it as well. But if you look at operating income, trading and sort of marketing is now about a third of that, and it was about a quarter last year really. So in bad years for commodities markets, kind of trading kind of takes over.
And which part of the trading operation has been making all the running?
Well, it's metals trading in particular, which is kind of interesting because metal prices were all over the place and mostly down last year. But if you have volumes, if you have a miner attached to your business, pretty much, if you get those volumes out, you can make money. So we saw that with copper, for example, which is a metal which kind of went from supply to kind of almost like a deficit over the course of 2013. So there's lots of opportunities for trading there.
Mm. On the mining side, we've heard from a lot of the miners over the past few weeks that they're cutting their capex and they're sort of pulling in their spending plans. Is Xstrata, the Xstrata part of the Glencore Xstrata business, doing the same?
Yeah, I mean, Glencore is the last of the big four to report, and like you said, they've all, given targets on capex or the cash that they'll return to shareholders. But you have to remember, Glencore's always been different. First, when it took over Xstrata, it kind of looked at all these big gold-plated projects and said, well, look, this is not really the future of mining. They've been actually very honest today, actually, in the results and saying, well, look, investors got absolutely fed up with all these kind of huge spending projects to add new growth, which, when commodity prices turned, just resulted in the market being completely oversupplied. But you also have to remember, well, there's always been like the Glencore way of avoiding greenfield and kind of buying and selling assets quite freely. So they've kind of brought that to the table as well. And in fairness, it's been quite successful in 2013. Mm-hmm. So if you look at the sort of $5 billion of operating income from the mining side of a $7.4 billion total for the group, about a combined $2.5 to almost $3 billion has come from cost savings and increased volume. Mm-hmm. Now the other side to that though is that this has mostly been in copper. Investors already see Glencore as a sort of copper exposed miner, but this is really where quite a lot of the cost savings are coming from. So this is mines in Africa, Peru, Chile, which have been expanded. They have low cash costs. They can get lots of supply out. So copper volume was up a quarter last year at Glencore, which is fantastic, wonderful. As long as you think copper prices are going to stay where they are, or at least not fall, or hopefully rise much further.
Well, it sounds like for the moment at least, Glencore Xstrata, the trading business, is making up for what's a more difficult situation for the mining, and no doubt the logic of the merger will say that eventually those two roles might well reverse. Joseph, thank you very much.